So I just wanted to go through the account classification with you. So we did the accounting equation where assets equals liabilities and shareholders' equity or owner's equity. But now what we need to do is figure out what types of assets a company owns and then what types of charges are against those assets. So what part is debt and what part is equity. And then we're going to look at the types of revenues a company has and the types of expenses a company has. So I went through your textbook and I highlighted for now all of the accounts that I could see that we're dealing with in this chapter. And so I've already categorized them for you. So we'll just start with assets and cash. That's just basically what you have in your bank account. So if I asked you, it's the end of the month, we look at your bank account, that's your cash. Accounts receivable, that is if you sell your services or your goods to a customer and they still haven't paid you, that goes into accounts receivable. Now, supplies and inventory are pretty much the same thing. So I'll just go and discuss inventory. So inventory is when you buy a product from your supplier and you plan to sell it, but it just sits in inventory until it's sold. Prepaid expenses, I'm not going to explain this until we get into accruals, but just know if you see prepaid expenses, put it as an asset. And then land, building, and office furniture, these are things that we need to have in order to do our business. So if you have a building, you obviously needed a piece of land and you put your building on top of that in order to sell your goods and services. And then you'd need to fill your building with furniture and equipment. So all of those go as assets. Now, when we think about the liabilities, this is the company's debt. So some of these assets were purchased with debt. And now when we think of accounts payable, what I want you to think of is we purchased the inventory from the supplier, and now what we need to do is we haven't paid the supplier yet, so it stays in accounts payable until we pay them. And then the notes payable and the loans payable, just think of those as bank loans. So say, for example, we wanted to buy some office furniture, but we didn't have the money to do it. So we could go to the bank and hopefully they would give us a loan and it would show up as a liability. And then the shareholders' equity, that's just the equity. So this is the part of the assets that are financed with equity. So with an incorporated company, share capital is the shares. So you'd have to issue shares to the shareholders and then they'll give you money, and then that's another way you can buy your assets. And then retained earnings, we'll talk about this a little bit later, but I'll show you a statement of retained earnings. So I'll show you everything that goes into that account. But just for now, we'll just keep it there. Now, when we look at our revenues, the only one that we're looking at right now is service revenue. So say, for example, I have a bookkeeping company, then I charge out my services for bookkeeping. So that's an example of service revenue. And then everything that I need to incur in order to make my revenue is just an expense. And so usually if it has expense after it, aside from prepaid expense, that's a dead giveaway that it should be listed as an expense. So I think as we move forward in the course, every time I see a new account, I'll go back to this matrix and then I'll list it. So what you guys need to do is you actually have to memorize that these are all assets, that these are all liabilities, that these are all shareholders' equity, that this is all revenue, and these are all expenses. Because the next step that we're going to do is looking at journalizing.